Okay, everybody, yes, so welcome to the AMA for the spring halving, and I'll go over what's happened with the spring halving, what it means for the token economics, and what we can expect from the prices as a result of this. And so what you can currently see on the website here is this is the statistics of the mining pool. It doesn't just include our mining pool. You can see the hash rate for our mining pool on the bottom left. Just to the right of that, you can see the total hash rate. That includes miners who are mining through our pool and also through their own pools or mining solo. And if you look at those, you can see actually we've got maybe about half of the mining power is in our pool. So I think that's actually a very healthy way for the project to be, because it's not all completely centralized. But what's happened recently with the spring halving, you can see this on the bottom right chart here, is that the number of spring tokens that are produced in each reward. So a reward happens once every 10 minutes on average, and there are only 42 tokens now, spring tokens produced every 10 minutes on average. A few days ago, that was 84 tokens produced every 10 minutes, and spring was being produced at the highest rate. So let's have a look at the charts. Well, actually, before we have a look at the charts, I can go to the home page and show you what the production schedule of the tokens is. So it's on this page somewhere. Unfortunately, this is a very long page. Okay, here it is. So this chart here shows how the rates of production of the different tokens change over time. And as you can see, they all become produced at a slower and slower rate as time goes on, but it's staggered. So they produce this kind of, when they're all plotted on the same chart, they kind of twist and wind around each other like that. And what happens is obviously that when something is produced at a slower rate, but the amount of money that's being spent to buy it every day is kept constant, then it goes up in price. So that's a supply shock. So what's just happened with the spring halving is that the rate of production of spring has been cut in half. That's where you can see that if you go to on the horizontal axis here, where it measures time in years, if you go off to a little bit before 4 years, which is about how long our project has been in existence, you'll see that the green line for spring, it drops suddenly a little bit before 4 years. And that's 3 years and 9 months since the project started, and that has just happened. So we've just gone through that. That's a supply shock, and that means that the rate of production of spring tokens is now half of what the market expects. So the amount of money that's being spent on spring tokens every day is approximately constant. It's whatever is going through the investors club. But that amount of money, that price, that's the same amount of money is now being paid for fewer tokens, because the miners are producing fewer tokens every day and so on. But as Andy was explaining, it's not an instant effect. What happens is that on the day of the halving, and a few days after the halving, there's only a small number of tokens are kind of missing from the market that would otherwise be there if the halving hadn't happened. So what happens is that scarcity of tokens, it has to build up over the course of months in order to really affect the price. But it is going to happen. We can have a look at the charts here and see what's happened as a result of those rates of production that spiral around each other. If you look, this is the historical token price chart here. And what it shows is that as the rates of production cycle around each other, the prices of the tokens also cycle around each other. But there is the economic effect of a halving doesn't just happen on a single day. As you can see, for example, the first spring halving that took place in June of 2022, that happened, and it was a very slow and gradual rate of increase over the course of the following year, basically, for spring to become the most expensive token. And we can expect that to happen again this time. If you look at the far right-hand side of the chart, you can see that people have already been anticipating the spring halving, and the price of spring has already been rising. It is, I think, just barely still the lowest price, but you can see that it's basically tied with summer, and it's very close to autumn. Winter is still above it, but that's because winter has been produced at the slowest rate for the last 9 months. So what we're going to see over the next few months is that this supply shock is going to kick in, and the spring price is going to rise above the other prices. And you can see that that's what's happened after all the previous halvings, and that kind of indicates that the economics of the system is, that's all working. So just to give you an idea of what the numbers are like, so when the project launched, that was in September of 2021, there were 24,000 spring tokens being produced every day. and now there are about 6,000 tokens being produced every day. That's Spring tokens. So that means that the rate of production has dropped by a factor of 4 since the project started. And Spring has gone through 2 halvings. Everything else has only gone through 1 halving. But 9 months from now, Summer will go through the same thing. And if you look at the bottom right-hand chart on the screen here, Summer, which is currently being produced at the fastest rate, is going to drop from 70 to 35. And once that happens, it will be the token that's being produced at the slowest rate, and then Summer will become the most expensive token as the market reacts to that supply shock. And then 9 months after that is going to happen with autumn, winter, and so on, and it will keep cycling through this. So that's what is the economic effect that keeps the prices cycling around each other, and that's what gives people the opportunity to trade tokens for more tokens. And the whole idea of the project is to make this happen, to make prices cycle around each other so that people can trade tokens for more tokens and they can make a profit in tokens without risking a loss measured in tokens. And just to say this again to everybody, there's no way, we can't control the direction of the overall market. So we can't guarantee that overall prices are going to be higher or lower in the future. So you may or may not make a profit measured in dollars. That depends on the market. But you can make a profit measured in tokens without risking a loss. So as long as you just trade tokens for more tokens, the number of tokens that you have will increase and will never decrease. And that's essentially the idea of the project. And I think summarize this, but kind of also end on a little bit of a positive note. What's happened lately in the Investors Club has been absolutely brilliant. We've got lots of new diamond whales. We've got lots of level 3 investors, level 1, level 2 investors, and the prices have gone up as a result of this. And I think that this has been solid growth, and we can expect it to continue. The future is basically looking very positive.